According to the recently released Global Economic Prospects report by the World Bank, India is predicted to remain the fastest-growing major economy globally with a projected GDP growth rate of 6.6% for FY25. What are the key findings of the report? Global Growth Outlook. According to the report, for the first time in 3 years, the global economy is showing signs of stabilization in 2024. Globally, GDP growth is now anticipated to be 2.6% for 2024 to 25. For FY26 and FY27, global growth is expected to be 2.7% amid modest growth in trade and investment. Projection for global inflation. The World Bank forecasts a slower moderation of global inflation, averaging 3.5% this year. Central banks in advanced and emerging market economies are expected to be cautious about easing monetary policy due to ongoing inflationary pressures. Challenges to global growth. The global outlook remains subdued due to factors such as geopolitical tensions, trade fragmentation, higher interest rates, and climate-related disasters, despite some near-term improvements. It also emphasizes the need for global cooperation to safeguard trade, support green and digital transitions, provide debt relief, and enhance food security. South Asian region SAAR Growth Outlook. In the South Asia region, GDP growth is projected to decrease from 6.6% in 2023 to 6.2% in 2024, largely due to a slowdown in India from its high growth rates in recent years. Other economies, such as Bangladesh, are expected to maintain robust growth, though at a slower pace. Pakistan and Sri Lanka are expected to see strengthened economic activities. Poverty reduction. The report noted that per capita income growth in the South Asian region is expected to decrease from 5.6% in 2023 to 5.1% in 2024 to 25, then slightly rise to 5.2% in 2026. This slower pace is due to weaker than expected growth in private consumption and fiscal adjustments that may reduce household income. India's economic trajectory. India, the largest economy in South Asia, has significantly contributed to regional growth. The country's growth rate for FY24 is estimated at 8.2%, driven by its industrial and services sectors, which have offset a slowdown in agricultural production caused by monsoon disruptions. Fiscal and trade balances. In India, the fiscal deficit relative to GDP is projected to decrease due to increased revenues from a broadened tax base. Trade deficits are narrowing, particularly in India, contributing to overall economic stability in the South Asian region. India's GDP forecast by MOSPI and RBI. According to the Ministry of Statistics and Program Implementation MOSPI data, the GDP growth provisionally stands at 8.2% for the financial year 2023 to 24, as compared to the growth rate of 7.6% in FY23. The Reserve Bank of India raised India's FY25 real GDP forecast to 7.20%. World Bank. It was created in 1944 as the International Bank for Reconstruction and Development IBRD along with the IMF. Weaker than expected growth in China. China is the world's second largest economy, so a slowdown there has significant global impacts. This could be due to factors like a real estate market crisis or internal political instability. A sharp slowdown in China reduces demand for raw materials and other goods exported by other countries. This can lead to job losses and economic hardship in countries that rely heavily on trade with China. More frequent natural disasters with worsening impacts. Climate change is increasing the frequency and intensity of natural disasters like floods, droughts, and hurricanes all across the world. These disasters cause widespread damage to infrastructure, homes, and businesses. They disrupt agricultural production, leading to food shortages and price hikes. Rebuilding after disasters puts a strain on government finances. What are the key policy challenges in the emerging market and developing economy? Elevated debt. Many emerging market and developing economy EMD struggle with high debt burdens, weak growth prospects, and downside risks. International cooperation is crucial to address debt crises and prevent economic instability. The G20 Common Framework for Debt Restructuring is viewed as inadequate and needs improvement. Climate change. Current global climate commitments fall short of achieving net zero emissions by 2050. EMDs need to invest 1 to 10% of GDP annually to achieve low-carbon development goals. Mobilizing public resources, carbon pricing, and attracting private investment are crucial for climate action. Digital divide. About 1/3 of the global population lacks internet access, concentrated in EMDs. Governments can play a role by catalyzing private investment in digital infrastructure. Trade fragmentation. Trade fragmentation due to rising geopolitical tensions and protectionist measures hurts EMDs. Restoring the rules-based multilateral trade system and expanding trade agreements are crucial. Conclusion. The World Bank's latest report offers a cautiously optimistic outlook. While the global economy is showing signs of stabilizing in 2024, growth remains subdued compared to pre-pandemic levels. Continued global cooperation and effective policy measures are crucial to navigating the current challenges and achieving sustainable economic growth for all.